Bitcoin just turned positive on the session a moment ago.
Bitcoin and crypto in general plunging again.
Despite its notorious price swings, Bitcoin has become a mainstream investment this year and the topic of conversation at a lot of dinner tables, not to mention in pop culture.
The volatility of the crypto ecosystem is clearly correlated and cross-collateralized and driving the volatility of Bitcoin.
Hey everyone, and welcome back to Wealthy Value. The U.S. government has pushed a total of $9 trillion into the economy so far. With tax dollars so desperately needed, it's fair to assume the IRS will focus on cryptocurrency. But what if you could trade crypto tax-free? Here's how to do it in 30 seconds. Step 1. Open a crypto RIA account with our friends at iTrust Capital, the world's largest crypto RIA platform with over $3.5 billion in transactions and no monthly fees. Step 2. You can transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. All digital assets are held in offline cold storage with the leading institutional custodians, Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link, itrust.capital/value, in the description below to get $100 in Bitcoin when you open and fund your account with iTrust Capital. And now, back to our video.
I think that all the regulatory uncertainty right now in the political climate revolves around crypto exchanges, stable coins, security tokens, and DeFi exchanges, and all the yield products and all the advanced applications, right? That's where the regulatory uncertainty is, right? All the back and forth about what'll happen and when it will happen really relates to digital securities, digital exchanges, digital currencies. Bitcoin's digital property. We're not really having much in the way of serious debates around that. Like, no one's questioning whether you can take personal custody of your Bitcoin. That's not on the table. What I think in general about the crypto industry is there's 20 or 30 pretty powerful regulatory regimes, Japan, Korea, China. They're all going back and forth and they have different various degrees of view on this. And there's going to be a lot of regulatory intervention in the crypto economy in general around OTC trading. Whatever the US decides, Treasury, SEC, CFTC, that will probably drive 80% of the direction of the rest of the world, but not 100%. There's always going to be a bit of diversity there in views. Now, with regard to Bitcoin and property rights in general, my view there is I think Bitcoiners angst a lot about this more than they need to. There's like $750 trillion of property in this world that's owned by non-Bitcoin people. Like, if you try to figure out what is the worst case for Bitcoin over the next decade, the worst case for Bitcoin might be right now, as far as I can see, it's like, if you take custody of all your Bitcoin off the exchange, you have to admit that you took it. And now you have the Bitcoin and you could have it in any of 100,000 counterparties. You can send it anywhere in 30 minutes and you've got it on a hardware device or you've got it on any device, okay? Now, I want you to think about that worst case. And now I want you to think about the best case for the equivalent amount of gold, silver, property, equity, Apple stock, government bonds, corporate bonds, collectibles, art. Now tell me, is there anything else on earth that you would rather be holding than Bitcoin that you admitted to the government that you hold? I don't think we have to fear the government. Not right now. Like maybe in a decade. Right now, most of people concerned about regulation in the Bitcoin community, they're extrapolating from an altcoin. Like there's an altcoiner that was issued by some group of people that are going and they're running to the Bitcoin community saying, you know, if the SEC regulates us as a security, or we can't keep doing whatever we're doing, then they'll come for you next. My opinion is there's $12 billion worth of DeFi hacks in the past 2 years. I think the perfect becomes the enemy of the good. In theory, it would be nice if I could take my Bitcoin, put it into a decentralized protocol and generate yield on it. The problem with it is technically it's insecure, right? They're getting hacked like 3 times a week. So that's one problem. It's a technical security problem. The second problem is if you understand securities law, then you understand that they're all securities. Maybe you could come up with a way to do it with just pure Bitcoin. Like, I mean, the closest thing is almost like getting some yield on a Lightning node or something, but all the approaches people have solved so far are with security tokens, and the tokens are securities, which means that you have to issue them pursuant to a registration statement. If you don't, it's illegal. Let's deal with them separately. Let's start with volatility. Let's just enumerate all the sources of volatility. Bitcoin's volatile because the wash trade exemption. A fast money hedge fund can buy $1 billion of Bitcoin at 65,000. If it trades down to 50,000, they can dump it, drive the price down to 45,000. They can buy it back the same day, and they can write it back up again, and they can book what might be a $250 million tax loss. And if they have a 40% or 50% tax rate, maybe they just tax loss harvested $125 million by being volatile. Second source of volatility, all the unregulated DeFi exchanges, tons of them, right? Security tokens. The fact that I can issue a security token, I can issue 10 million of them. Well, I can keep 9 million of them. I can put 1 million in the float. I can then lever it up 20 to 1 or more, and I can cross collateralize it into another token that I might have. And then I can lean on that. And then I can cross collateralize that to Bitcoin. So the 6,500 crypto tokens create volatility for Bitcoin. The Ethereum platform creates volatility for Bitcoin, lots of it. If you look at the trading pattern of ETH versus Bitcoin, and I don't know if you've done it, you haven't talked much about it, you ought to. In the near term, what you can conclude is that the volatility of the crypto ecosystem is clearly correlated and cross-collateralized and driving the volatility of Bitcoin. It's a game of aggression, financial aggression, and you got to get big really fast. You got to raise as much money as you can. You have to buy as much Bitcoin as you can. My view would be I would raise as much capital as I can. I would buy Bitcoin. Then I would buy all the hash power I can. So if I can buy other Bitcoin miners, I would roll up every privately traded Bitcoin miner I could. You can see how this works, right? If you're trading with a 10x revenue multiple or 20x revenue multiple, and you can buy private miners at a 3x or 5x or 8x revenue multiple, you just buy them all. You buy them for stock. All of a sudden go from being $1 billion miner to a $10 billion miner to a $25 billion miner. And then you raise capital either through equity or debt or converts. And then you buy up all the hash power, or you lock up all the mining rigs, but they're already sold out for the next year and a half, probably. I would be shocked if the mining rigs don't get sold out for the next 3 to 4 years. In a capital intensive business where there's a duopoly or something, people sometimes they will just buy those delivery positions out for 5 years or 10 years. Where do you see that? Take example, Boeing and Airbus in the airline business. You know, another Etihad, they would buy like the next 8 years worth of 787s, just buy them all, lock everybody else out of the market. So I think that you can buy that up, but you don't need that much capital just to lock up all the delivery. And then you end up just having excess capital. So what do? You buy the Bitcoin. Ideally, you buy the Bitcoin before it appreciates in value. Don't focus upon the 4-year halving cycle. Focus upon the regulation, the education, the technology, the integration. I find it to be really kind of a tragedy in a way that there's so much energy going into reinventing the wheel. Like Bitcoin and Lightning, right? Bitcoin is the property network. Lightning is the transaction network. Okay, you've got a non-custodial transaction network. You got a non-custodial asset network. Why do we got to reinvent it 18,000 times? Why don't we figure out how to plug the wheel into Facebook and Google and Amazon and Apple and Microsoft. And you don't really need to invent, a ton more features. You don't need that many more features. We can polish the lightning a little bit, but really the innovation should be in the application layers and the network layers